All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Monday. And yeah, welcome back after what was hopefully a nice, refreshing, and recharging weekend. Not too much for us to talk about here pre market, at least like not from a wild perspective or anything along those lines. Last week was a week of consolidation, right? Not exactly a very range bound week there. Get rid of this. And we just saw, honestly, like really small, limited, challenging ranges. I think we still did a reasonably good job there navigating some of that. We'll call it indecision there last week. But we're still generally looking for that breakout narrative or that change in quote unquote personality. So that's what we're kind of crossing our fingers for here today, right? Really, the main priority here is to see if we can establish anything there, get back to sort of trending conditions, even if it's on a short term basis, and then hopefully, right, we can establish, some sort of nice path of least resistance. So excited to see what happens, but again, probably expecting things to be slow and choppy until we get some sort of proven otherwise. And then we did a really good job of managing there that last week, right? Or managing that there last week. That's probably the better combo of words. And I think it's going to be more of the same here, right? Or base expectation is it's going to be the same until we do get some sort of resolution here this morning or this week, right? So last week we did a good job of basically waiting for the price action to kind of like settle into its groove, and then we were able to take some trades. I think base expectation is that this week is going to be very similar to that, and hopefully, right, we can find some decent momentum and we can build out things from there. So obviously very excited about what's in store for us here, but also trying to I don't know, maybe like slow myself down here just a little bit so I don't get too aggressive or too wild here this morning. All right. From an economic calendar perspective, it should be okay here. It's a little bit busier. French bank holiday. I don't know if anyone cares. Looks fine. It's going to be the week of CPI. It's really what we're going to care about here. Yeah, a little maybe a bit busier economic calendar than what we had there last week. So let's see if things can go from there. But besides that, hope everyone had themselves a great weekend, are feeling refreshed, recharged, and ready to go. And let's get after it. So first things first here, what's the count on ES? How do we feel? What do we think? Anyone? All right. It's a week 3 for 3 here to the downside. Sorry, week 2 out of 3 here to the downside with volume. Right, it's a green pre-market candle here. That's also I'm not calling it a gap down. We're seeing bear or bulls in control here pre-market. Um, and yeah, still looking for that bullish fake out or bearish fake out before being super bullish. We're going to be targeting a move towards 6,300 here again today. So again, not much changing from a levels perspective. And then we're going up 6,340. So again, not much needs to change to the downside here. Looking at 6,260. That's going to be our pre-market level. And then again, I would like to see a bullish failure prior to a bearish entry. All right, NQ, same thing here. Week 2 out of 3 with volume now. It's better volume, right, than what we have on ES. So ES quite significantly below outlier. NQ kind of flirting with that number. That being said, right, probably still not super impressive from NQ. Because if they were strong, right, why didn't they either close under new lows or close under that inside bar low. Kind of just looks like a fake out scenario here. So we're at 22,903.50 here pre-market. I think realistically probably looking at 23,000. I don't think that needs to change. And then to the downside here, 22.8. Again, I don't think that needs to change here too much. So our plan continues to be very similar to what we did there on Friday. But yeah, let's see how things go. All right, CL. So higher high, higher low, decreasing volume. And then kind of a rejection here pre-market. So we're going to call this a 1 for 3. And we're looking basically above 69 bucks here today, right? That's clearly where we've seen the rejection. So we're basically looking, we're going to call it a breakout over the blue line. Right, and then we're going 69.50 and beyond, right? So in okay shape. There to the downside here, we're looking at like 68 bucks as our starting point. And then we're targeting a move down towards 66.50. So 67.50. So plenty of space here, right? We can get it, but let's be a little bit patient here and make sure that we do get a clean story. Okay, Apple 1 for 3 here to the upside, doesn't change. Tesla 2 out of 3 to the upside without volume. Microsoft technically decreasing volume, so green candle decreasing volume, gap down. We're going to call that a 1 for 3. Amazon 3 for 3 here to the upside post Prime Day. I don't know about you guys. Every time I look at Prime Day stuff, it feels like the deals get worse and worse every year. All right, NVIDIA week 3 for 3 here to the upside. AMD, green candle, decreasing volume, gap down. Pretty good decreasing volume, but still decreasing. Again, we'll call this a 1 for 3 here to the upside. Meta 717.51. Green candle, increasing volume, gap down. Kind of looks a little bit like our indexes, right? Kind of same candle shape. Again, we're going to call that a week 2 out of 3 to the downside with volume. Netflix, good volume, nice little breakdown there. Looks like a good continuation. Did close under Thursday's low. That's not something we've seen pretty much anywhere here. So that definitely stands out just a little bit. Earnings is what, July 17th. That's kind of fascinating. Trying to think if I could find any exceptions here, but I don't think I can. So we're going to call this a 1 for 3 here to the downside. All right, Google, green candle, increasing volume, gap down of 9 cents. So we'll call this a 2 out of 3 to the upside with volume. And then the old Vixaruni here, 17.27, fading a little bit. But again, still only like an implied range here of about 1%. And then Bitcoin, quite the squeeze here. So I wonder if Bitcoin's going to be a little bit of like a leading name for us, right? To a certain extent. Is it going to push higher? Is it going to show us that momentum? Is it going to be the name that's kind of in charge? Yeah, I'd be curious to see, because that was definitely the story here over the weekend. Yeah, so we'll, hopefully, right, we'll get some sort of high conviction thesis here and can go from there. Any questions here this morning, team? Today's National Crypto Day in the US. Okay. That's interesting. I didn't know that that was a thing. All right. So, I mean, we went through this pretty quick this morning. I mean, it definitely helped that ES and NQ pretty much required no changes. How's everyone feeling? Everyone feeling sharp this Monday morning? So, yesterday, right, or Friday, you have a red candle, right? So that's point one. You have increasing volume, right? That's point two. The only thing missing here, right, is bearish price action here so far this morning, which hasn't happened. So we've got a weak candle shape, we've got a strong volume profile, and then we have a gap up. So it's a weak 2 out of 3 to the downside with volume. All right, any questions here, team? Not that I know of, Willard. Maybe it's just the squeeze into the National Crypto Day. I don't know. Truth be told, like I don't look out for why things happen too much. Like outside of my kill zone, because there's always a why, and there's always more than one. So I think it's like a little bit of a fool's errand to try to look for the explanation. Just trade the price action. Don't trade the feelings around price action. All right, so market opens here in about 50 seconds. Kind of fire through that prep here this morning. So, Elion, I don't know if you're in the stream, kind of sounds like you are. The most likely difference between why my chart is behaving differently and your chart isn't behaving because I only use for my data on the short-term time frame. I do session regular trading hours. If you have electronic trading hours, then it's going to look as if price is moving. So that would be the primary difference. Obviously, markets just opened, so a little bit of a possible gap there, but that's probably why it happened. If you're saying everything else has been set up, then that's it. Yeah, let's market open their team. Let's see how it goes. All right. So some good buying here pre-market, basically maintaining right the or sorry, some good buying here post open, maintaining basically some of that bullish momentum. Now we need to see decent volume here. That's really the main ingredient that we care about. Now on NQ, we're there where we have a very impressive volume standard. Now we're looking to see if these stories can sync up and become consistent. We've also seen a little bit of a narrative right in the last, we'll say 10 days or so, where we have had a couple opens that are larger than the previous day. And then the volume kind of like evaporates for the second half of the session. That would be my base expectation probably here, right? I'm a big believer markets are going to behave like they always have until proven otherwise. So not really expecting today to still be a super aggressive move here off the open. I still think it's going to be a little bit more of like a mature, and that's like in air quotes, mature market here while we wait for things to kind of resolve themselves and kind of figure out their path of least resistance. All logged in here. Good volume, ugly candles. Oh, all right. If anything, right, today I have to probably fight back a little bit against a bit of a bearish bias here. I've been thinking about bears all day yesterday. Last or yesterday morning, making myself a cup of coffee, and I had a friendly little black bear rubbing his back on a tree in my garden. So I've been in a bearish bias here for the last 24 hours. So working pretty hard here to fight that bias a little bit. We'll see how things shape up or how they come together. But I've been thinking about bears for 24 hours. So you guys are going to give me some slack here today. There he is, him and his favorite tree right there. I don't know if this guy's a baby. He's grown a lot since the last time I've seen him though. Yeah. Friendly little puppy. Yeah, exactly. I see a bull in the morning, guys. We're gonna go all in on calls. I'll look into it. If I ever get into a bad win streak here, I know who to blame. Honestly, black bears aren't particularly scary. They're pretty. They're more afraid of us than we are afraid of them. I don't want to ever see a cougar. I don't want to see anyone or any bears with sharp shoulder blades. That's when things start to get scary. Yeah, so far, very indecisive open, right? High volume, but not high conviction. Kind of the worst combo, I would probably argue. Oh yeah, yeah. Wolves are kind of scary too. This would have been now a few months ago, but over the winter, right? I stayed at like a different cottage, one that I usually rent out, and there's like a coyote's den, uh, like in the forest though, as wasn't too far away from my property line. And oh my gosh, man, was my dog so scared of going anywhere near that corner? It was so funny. Oh, so far very slow open. Kind of a fake out maybe. Good volume, but low consistency. I'm not having any issues, DJ. What's going on? Yeah, market miner, absolutely. Cougars are terrifying, and moose will charge you if they feel blocked, and that can be pretty scary too. Okay, if you're seeing a runtime error, go into Pine Script and see what this. There's gonna be like an error log here at the bottom. If you can send me what that error is, I'd be able to give you a better answer. The other alternative, DJ, right, is just delete that chart layout and bring it up again. Basically, just like give it a quick little reset. But there shouldn't be any issues. Honestly, the animal that used to give me the most trouble or the most trouble in Montreal was raccoons. And moose look like they're friendly and gentle, and then they like truck stick you with 1,200 pounds. Yeah. Yeah, they will fuck you up. So far, so slow here, guys. No rush to do anything. Well, we got a little bit of time here, but when I was a kid, I think I probably would have been 15 or 16, something like that. Um, my family, we had like a cottage. I say cottage. It was like a really rundown house that my dad spent whole childhood renovating. But we'd go there in the summer, and it was like a ghost town. So there were like a few houses there, but it was like an old abandoned mining town in Canada. So the population was like literally 15 people, no cell phone service, no internet, completely cut off from the outside world. Sounds terrible, maybe, but there was an incredible trail network there, right? Because after all the miners and all this kind of stuff. Yeah, I'm still gonna wait on this a little bit, Richard. I don't have a consistent enough narrative across the board. So if I'm gonna be trading, I'm gonna be trading longer time frames here this morning. But anyway, there's a huge trail network, right? That would like connect all the various places where the mine used to be, and it was really really beautiful in the mountains, all this kind of stuff. So yes, Simone, it should, but just be wary, right? That the indicator here is programmed to look at the first candle of the day. So you might need to change the candle times, right? So it says the opening range time here inside the settings, right? So you might have to type in a different time if you want to be looking at different session times. But yeah, so was like going around the trail, turned around a corner, and I saw a brown bear with her two cubs, and we had like, well, I don't know, maybe a 35, 45 minute kind of stare down. We were just looking at each other. I was the most scared I've absolutely ever been in my entire life. So that's why I have a bullish bias now. Long story short, why I have a bullish bias. Oh, actually, bigger dump there than I maybe expected. So we possibly have an opportunity here on the 5 min. This would be setting up, and if this move fails, right, then that's going to be potentially our sign there of like bearish capitulation. Oh, 100% market miner. Actually, kind of the funny thing about that. So exactly that. Once the bear eventually walked away, I found a trail or like a tree off the side of the trail, and did my uh uh bowel cleansing ritual, right? We'll call it that. And then I biked up another maybe 200 meters, and I saw three really fresh bear poops. So in hindsight, they were just as scared of me as I was of them. All right, so we're starting to watch here NQ to the downside. Really strong candle close. We're targeting our 2R range here. So just be patient, team. 855.75 would be the stop loss for now. The main problem I would say with the way that this move has happened is it has happened with like kind of a frothy element to it, right? So now stop loss needs to be 864.75. I don't know if we're going to get a pullback here. Maybe. So 864.75. I'll just call it 865, right? Just keep the math simple. And let's be patient, right? We've kind of already seen this thing pull back, retest the stop loss price, just did it again. Again, right, our big concern here is that price action is frothy. This, I would say, kind of feels a little bit frothy. $871 stop loss now. Huh. See, the thing with this is I have had two stop losses that we've been looking at. Both of them have failed here so far, right? So regardless of what entry we would have taken in on here, I think so far we would have probably lost money. So probably I'm trying to find the right combo here of words, but maybe it's yeah, it might be telling me that the direction is correct, but timing is wrong. We'll see, but again, that's now like the third failed pullback, right? So again, I don't know if I have the conviction to be able to play this here yet, or at least not with any reasonable form of confidence. I think still being patient here is the right call. All right, no rush. Okay, back to 900. Yeah, maybe a little bit of a capitulation type move, right? That was looks like strong bears. Doesn't act like strong bears. That now that might be an idea worth back testing. I don't know how I would do it, but on those failed moves, like failed breakdowns that like don't respect your stop loss. So like you get the initial move lower, create a new stop loss, test it lower, make a new one, test it lower. I wonder if there would be a reversal edge there because had we traded to the upside instead of to the downside, I mean I haven't placed a trade here yet, but that would have been a 2K win. I wonder if there's something there. Good volume, really good volume. Kind of surprising. I mean, that tells me I should be going green to red or red to green. Sorry. 914 would have to be the stop loss. Reference price would be like 925. Let's see how it holds up. Again, we've seen pretty much every stop loss we've looked at here so far today, right, has just been a line on a screen. It's not acted as any area of support here yet. So again, we want to buy ourselves a little bit of time to make this decision. So again, long, right, would be the bias here now. Stop loss, I'm just going to call it 914 on the dot. Just keep the math simple. That's an okay reaction there. Still not sure if this thing is quite ready. That's a better pop. Yeah, I got a partial fill. I didn't get a full fill. I got a partial fill, 924.25. I'm just gonna close it there. Well, this is my confirmation candle here, Richard, right? So this candle here is my confirmation. It's my signal at 945. We made an immediate higher high above that 945 handle. So I know that if I'm going to trade that execution, I need to use the aggressive entry technique. So aggressive entry technique would be stop loss low of your entry candle. Well, I got 10 points out of that, guys, on kind of a bullshit execution. Didn't get the sizing that I wanted on the pullback, so just closed it. I'm just going to reset and see if I can possibly get another decent reaction. That little climb, though, to like 36 and then pullback isn't making me feel tremendously confident here. Kind of like a little bit of a deja vu to some of the fake outs we've seen, I would say, maybe in the last 10 days or so. That would have been close. I saw 914.25. There it is. So again, okay, would have stopped us. So good decision. Again, like if you're seeing maybe this is like a little bit galaxy brain, but if you're seeing big volume and you're jumping in at a price and you can't get a full fill at that price, maybe something suspicious going on there, right? Especially if I'm only trying to buy like 2 contracts, an account. That probably shouldn't be too much. Now we'd be looking at a 906 stop loss, and it'd be going from 2 contracts to 1 contract. Same reference price here. Come on. Okay, guys, I am in 928.75, 1 contract. Kind of a shitty fill, actually. Okay, so let's see if this thing can break out here. Oh. Again, a little bit of like a breakout and then a pullback. Not super thrilled about. Hmm. So definitely early on my entry. Am I wrong? I'm trying to fight that a little bit. The fake out's giving me a bit of pause. Yeah, I kind of feel like I'm getting reminded here that I don't get paid for being early. It's a little bit of a pain in the butt. Being 10 points early is a lot. All right, I just got stopped out there. Annoying. All right, puts me at 132.84 on the session. Yes, you can see on my screen here, right? In NQ long 928.75. One con stop at 906. I'm not quite sure how else to make it more obvious that I was in a position. I will always write it out on my screen, guys, right? So you'll be able to see. I'm not quite sure what else I can do to make it obvious. I also posted it in the setup alerts channel. So again, right? I'm not quite sure what else I can do to make it more obvious. And if you're late, right, don't chase it. If you miss the trade, you miss the setup, you miss the discussion on why we're taking it, don't take it. Don't hope to get bailed out, right? Just because I'm in a position. Yeah, I probably should have been able to close that trade a little bit earlier. Once it gave that failed move and then pulled back, I gotta have a little. I gotta be a little bit better at closing those. See the failure. I see the fake out. I should be able to get out. Too low volume still. This doesn't make a ton of sense to me, right? Why, if the volume is so strong, why isn't it an inside bar? That's not a very high conviction combo. Okay, CL could be breaking down here for us. Why would I do that? It's a fake out lower low. This is a failed move, right? So my confirmation here needs to happen on a break and hold under the opening range. It just being a big candle to start. I have no setup trigger there. So no, I've got no feelings on it or no thoughts on it. It's not even close to following my rules. You should know that, Antonin. You don't trade breakouts from the first candle. Right? A bad close on the 3-minute time frame there on CL. So again, we'll wait for this on the 5. Part of me that wants to try this again. Okay, so 917 would have to be the stop loss here. 22, 917. Be higher. It could be 919. And I'd be looking for a reference price pullback. It's like 928-ish. I'm looking for a long here, guys, right? Again, that should not be surprising. I'm looking for an entry under that blue line with a stop loss at the red line, right? Okay, guys, I'm in 927.50, 2 contracts, stop loss 919. Keep pushing. Maybe a little bit of some deja vu there, right? Let's see. I don't know if I like how bouncy this is. Probably not the perfect reaction. So want to see this thing start to separate here ASAP. Otherwise, I'm going to get out. I'm worried about the fake out, to be super honest. Okay, there it goes. Start to really push here now. NQ, there we go. Kind of a bullshit reaction. Keep pushing. I've been in this trade for what, 3 minutes? Not even 2 minutes. And it feels like this is going to be a bullshit feeling trade. Like it's going to be a worker. I would like to get more separation here to be able to survive, I think, some of that space. I don't know if I'm going to get it. And so I'm trying to maybe think about closing here a little bit. Let's see. I don't like it. Terrible close to this candle. Terrible. Okay, so I'm going to look to get out here pretty soon, guys. I don't like this reaction. This is far from ideal. So looking to get out here as PNL is increasing. So looking for my exit here. Come on, find it, find it, find it. Trying to get to like as close to the previous candle's high as possible for my exit. Although that's starting to feel rejection-y. Okay, watching closely here. Give me a nice pop. Give me a nice pop. Okay, watching. Come on, give me the pop. Okay, watch it here, guys. There it goes. There it goes. Give me our chance. All right. I am all out, guys. I am all out. Exit price of 940.75. I will take that. And I think a good decision. I think a very good decision. So it wasn't necessarily a perfect exit, right? It's just we know that when price action is choppy, it likes to test the highs and it likes to test the lows. So you just wait for it to creep up back towards the previous candle high, and then you click submit as it runs and flies through that price. My voice kind of cracked halfway there, so that didn't sound like a very high conviction answer, but that's honestly what I'm doing, right? I'm basically making the bet that it's going to pull back towards the upper end, potentially fail or trap that move, and then pull back. If it sets up again, we can always try later, but I didn't feel it didn't feel like a strong thesis in the trade, right? It felt like it was going to be a fight. That was pretty much my instant reaction, or like my instant sensation once I was in. And I think that was the right read. I 100% do. Feel pretty good about that exit, actually. So kind of a weird morning. I had one trade where I made money where I got a partial fill. I got one trade where I got stopped out, and then one trade where I've made good money, but not like great money on a move that's like kind of pathetic. So far, kind of a choppy bullshit day here. A lot of work for 3 trades without a lot to show for it. But a good decision, right? We would have just been stopped out there. So really good decision. I don't necessarily think I need to, like, the language I just used there was probably a little bit too pessimistic. Called it like a bullshit trading day. Probably not fair. I think it's probably better to view this as like a trading day where we've seen the flow well and we've managed that well, right? I think the fact that we've not allowed ourselves to get faked out before it makes new highs here, I think that's a really positive mental capital protection moment. And we should celebrate that, I think. Right? Because that is a win. We went from making $600, right, to not losing 500. That's a really good outcome. So now we're going to look for a possible other setup here, right, for continuation of that reversal thesis. We've done nothing here yet that invalidates that 945 rejection or fake out. Yeah, so indicators I have on my screen are, as you can see here, it's Bollinger Bands. This I don't really use. Volume, DTR ORB, which is like this green box and these red lines. And then just a basic volume indicator with a moving average, with a volume moving average. Again, guys, if you want to get my exact setup, please just watch the videos here in the Start Here channel. It'll break down all of those concepts here so that you can be up to date with all the information you need before you ever join the stream. And yeah, I do like the volume candles. They make things stand out just a little bit more, but they don't actually change anything. Okay, so not outlier volume there on that 5 min, but it's a good little like trap and ghost scenario potentially. I guess the other problem I'm having a little bit is I'm like, this would be a trade to take if markets were moving very quickly, right? Or maybe not quickly, if they were moving smoothly. It's probably a better way to describe it, right? So in market conditions or market terms, smooth is slow and slow is fast. Right now we're going slow but choppy, not smooth and slow. So it probably doesn't reward, right, very aggressive behavior or very aggressive executions. I think it probably is going to reward being more patient. Now, the other thought that's running through my head there is that in an environment like this, we're probably making more money buying our stop loss instead of buying the breakout, if that makes sense, right? So like hypothetically, let's say we have a stop loss set here at 943. You'd look to enter your position at 943, right, instead of at 957 or whatever the random price was at the moment. But it's slow and it's choppy. So if that's the combo of information we're getting, I'm probably not going to be rewarded for being quick and aggressive, right? Hopefully it runs for you, Rusty. Sounds like you got those payouts in your pockets. Feeling confident. I love it. From CL. And again, guys, right? Even though it's at 9:55 and our entry was, 9 something, 9:20 something, this would have faked us out right before it makes this move. So we can't have any FOMO here because the only way we would have made money is had we broken our rules. So if you're going to hold it against yourself that you didn't make money when you followed your rules, you are putting yourself in a situation where it is impossible to win. What was your stop loss? How did you miss it? Is the other question, right? Because I feel like I was talking about the exit plan 2 minutes maybe before the exit actually happened. So I think I made it very clear over what the plan was. The thing that maybe concerns me here a little bit is how you survived to 9:53.25 without it stopping you out. That for me seems like maybe a little bit of a broken process there. I mean, if I get another setup, I'm not quite ready to walk away here yet. But I just want to be patient, waiting for the right opportunity. Basically, all I'm trying to do right now is talk myself down from being hyper aggressive, right? Because we've had, we'll say, 3 attempts here today on being able to take advantage of aggressive moves. And all of those trades have effectively stalled, right, in one way or another, or faked you out before making the move. So I need to make sure that whatever setup I do get, if I do get another one, it is very high conviction and almost like contradicts that indecision that we have seen post confirmation. So if I was done trading, I would just go walk away, truth be told. But I'm just being told a narrative that I don't need to be, or I'm probably not going to get rewarded for being hyper aggressive. So I need to slow down and make sure, right, things are perfect. It's fine, right? No problems there. Okay, so again, right, still no reason to jump in here and be hyper aggressive. We're going to look for another confirmation. Might be able to get it on the 3-min time frame here. But again, though, guys, right, had we waited, had we stayed in this trade, this still would have stopped us out here on this pullback to 911.50 before it makes this move, right? So there should be no reason for us to feel FOMO here or to feel like we missed this move. The only way we would have been able to have made money on this position holding till now would have been had we broken our rules. It's not sustainable. That's not something that you can trust or rely, right? Rely on, sorry. So please don't sit there being, oh fuck, I should have made so much money here today. Don't lie to yourself, please. Right? Remain objective. The only way we would have made money is by breaking our rules. Making money, breaking your rules is fun for a day. It's painful for a lifetime. Don't get addicted to that feeling. So wait for your new confirmation, Rusty. Right. And then just treat it the same way like you would a normal trade. So this would be your confirmation, right? Stop loss here, 94. If you can keep your average price below that, or now it'd be the aggressive. So now it'd be below 98. Sweet, right? And then just look for a pullback retest of 99.50. So basically just treat it like it's the exact same thing you would have done originally, with the only extra caveat, right? That you want your average price, your new price, right, to be below your stop loss. Let's go, Jared. Again, same thing, right? Just as I asked to Iron Man. Like, please make sure, right, that if you did make money on that play, you didn't do it, right, by changing your stop loss or breaking those stop loss rules. $1,000 is good, but $1,000 made by breaking your rules is a dangerous $1,000. Yeah, right. So break it down into those chunks here, Rusty, right? As you build up your confidence doing it. And then, right, you can start to be more and more aggressive in how you're increasing your sizing. That would be the base idea from my perspective. So yeah, you could do like a pullback here, right? Stop loss of 295 or whatever it is. 294.25. So buying a couple contracts here at that 97, you'd be in good shape. You'd still be below. Okay, let's see if we can close up and over through the opening range. Yeah, 308.60 on the day. Not exactly a banner session here. Not a strong enough candle close, right, for me to call that a confirmation on NQ. Better on ES, but I don't like that it got stopped right at 300. That bothers me. I know a lot of that increasing volume is going to be that rejection. For me, guys, I'm still remaining extremely cautious here. I don't see any reason to risk any capital yet, or at least not since our initial trades. Might just be one of those days where I have to be happy being green and not try to do anything else. All right, I'll be back in a second. One moment. So I think it seems like I think we made the right read, right, on the markets. We're in our bullish positions. Our bullish positions aren't necessarily telling us that mega strength. We get out and we avoid, right, that kind of violent reversal. And yeah, Rusty, I think that's a smart attempt, right? Once we see it not be able to break out above that psych level, I think for sure an issue, especially because NQ also did the same thing. So good job, man. Seems like you still got a little bit of a nice win there. But yeah, kind of, I mean, all the information we're getting so far today is that it's a day for scraps, right? So that's cool. We'll just play the market that's in front of us, but it's just a continuation of that, like, I don't know, bullshit consolidation theme, right? That we've kind of dealt with over the last week or so. And it doesn't seem like we're getting too much of a difference here. Now, maybe we could start to potentially look for some reversals back down towards low of day, especially on NQ. We've got a little bit of room. We're gonna have like 100-ish points. You know, maybe that could something be there. But just because bulls aren't strong doesn't mean that bears are gonna be strong either, right? So having the lack of like trend conviction there probably should go both ways, not just for bulls, right? And I don't think I'm going to get an increasing volume standard there to justify a reversal. CL maybe is kind of behaving like one. I'm scared to dip buy on CL though when Trump tweets about its price consistently. The yeah, just makes it so unpredictable. How's everyone feeling today? Everyone green? I'm not a monster, Dave. Just kind of feeding on scraps here a little bit, but hopefully everyone's doing okay. Love it, guys. Yeah, don't force it. Not a day to be hyper aggressive. Yeah, so we attempted 3 trades here. One, I got a partial fill, so I just closed it at its first attempt or first pop. Second trade, little stop loss. Third trade, nice win. Right, a win of like $600. So how much did you guys lose on your stop losses? So when you got stopped out here today, what was the damage? In at what price? Exit at what price? Okay, so Jamie, you panic closed your second trade there, or you went one contract. How'd you lose 500 on the second trade, Sean? Again, same thing. What was your entry and stop loss price? And entry at what, Sean? Okay, so you're risking 23 points. Okay. And then your exits, guys, on the last trade, what were they? How many contracts did you have, Jamie? Okay, Patrick. So you panicked closed the last trade there so far? Okay. So the thing here today, I guess, then is just the exit timing right on that last trade. Okay. So homework for all of you, right? Focus on closing as your P&L is increasing before that stall happens, right? We shouldn't be doing it. Like my objective, right, when I'm closing as P&L is increasing, is to look to get out at the previous candle's high, right? If I'm long, or the previous candle's low if I'm short. So all I'm trying to do, right, is just wait for that. So the counter, right, to panic closing is to be more specific over what your exit price is going to be instead of waiting for it to feel right. So what I'm looking for, right, is when I'm in a position, I'm looking to get out at the high or near the high of the previous candle. So just be more specific in what you're looking to get out, because this way you're not going to be like focusing on the P&L and being like, oh my gosh, I see it gone from 300 to 150 and then like making a panic decision. Wait till you get exactly what you're looking for. Yeah, I mean, but that trade, Jamie, like I wouldn't put too much stock into that, right? Because I got a partial fill. Once I saw it was a partial fill, I just closed my trade, right? So like that one, I wouldn't really count towards anything. It was just like I got a partial fill. I saw that I got a partial fill. I got out the second I saw that it was a partial. Right. So like I didn't trade that thesis in any capacity or any context. But like the P&L being plus or minus, $50, like who cares? That's not the difference here today. Like the difference between how I traded, guys, versus how you traded, right, is because um I closed my win, right, above my exit price, or above 1R, right? So like I was risking 440-ish dollars on that trade, and I made something like 600. So it's just that obsession over closing over my R multiple that has put me green on the day, right? The win of this trade here, that second trade, was larger than what my max loss is going to be. Right? Even with like a reasonable amount of slippage. So that's literally only why I'm green, right? Is because I closed at that 1R level or above that 1R level, right? As my P&L was increasing, instead of closing at a 20, 0.25R or a 0.33R or something like that, right? Closing over your risk multiple. That's how I have that margin for error. Closing at I don't know, we'll say half R, right? Well, I'm not necessarily looking for a specific number, right, Ghost? Like I said, my plan here is to just close at the previous candle's high, right? So the previous candle's high post entry was 939.50. So I'm just looking for a pop towards that price for me to get out, right? So I'm not thinking 1R, not thinking 2R, I'm not thinking whatever. I'm thinking give me a pop above 139.50. That's the number in my head. That's the number, right, that I'm thinking about. The reality though, right, is that if my entry price is I can't remember what it was on that trade. My entry price was 927. My stop loss was 919. Right? So I'm not even risking 10 points on that position. So for me to get more than 1R should be really easy, right? Within that context. So I got 13 points, risking what, 8? So I make it easy for me to get a good R multiple by buying deeper pullbacks. And then all I'm thinking about is, okay, I need to close, right, as close to my high of my previous bar as possible. So closing at the upper end, right, of my previous candle should always naturally increase my R, right? That's a byproduct of closing as my P&L is increasing. I'm not specifically thinking, okay, this is the number. The number that I have in mind is the previous candle's high, right? The candle that is telling me that it's time to get out. What's the high price? That's where I want to get my exit. The R multiple, or getting 1R, 2R, 3R, 4R, right? That is a byproduct of buying deep pullbacks and getting good risk reward entries. I make it easy to get a 1R, 2R, 3R move by keeping my risk tight. So it's a byproduct. It's not the obsession. Hopefully that makes sense. Right? Basically, the idea here is if I close my as my P&L is increasing, the thesis, right, is if I close my trades as my P&L is increasing, I'm more likely to get positive R ratios, right? That's the thesis. If I close as my P&L is decreasing, right, or panic close it, then I'm unlikely to get positive R ratios, and I'm likely to get, 25% or whatever. Guys, the questions of if I'm looking to place any further trades here, as long as the stream is active, I am looking to place a further trade. If I was done for the day, I would walk away, right? So if the stream is live, I am still looking for trades. I struggle to understand that question. I'm not here to entertain you guys. I'm here to make money. So if I don't feel like I can continue to make money, I'm just going to stop and go enjoy my life, right? Like I'm not here to just fill up airtime. Yeah. Don't understand that. No, I don't set a profit target for the day. Why would I want to cap my upside potential? And like this idea of a daily profit target, right? I think it's a trap because you sit there and you think, oh, I got to make $500 here today. And it's great, right? It works really well as long as you're making your $500. But the day where you make like 427 and now you're like, oh man, I didn't make my $500. Let me place another trade so I make my $500. And now you're up 250 because that trade lost. And you're like, okay, well, let me just get back to 427. So you take another trade and now you're back to zero. So then you're like, okay, let me increase my position sizing so I get there faster. And now you're down $1,000. And all of a sudden, right, things have compounded. All I'm thinking about on a daily basis is, did I execute my plan and did I follow my trading rules? If I did those things well and I actually executed within those contexts, then the money will take care of itself. But I don't really try to think about the dollars and cents on a daily basis. It honestly doesn't matter. They're a byproduct of making good decisions. So I should just focus on making good decisions and making good process thoughts, because then the P&L will take care of itself. And by thinking about, okay, let me make a good trading decision, that scales much more than thinking about making a good P&L decision. Because here's what's going to happen, right? I'm going to be, okay, I've got $1,000 P&L day. That's great, right? And I'm going to do really well trading. And then, you know, maybe I hit my targets. I get some nice run of form. I'm up, say, let's say 10 grand, right? Well, now I'm going to increase my position sizing. And I'm so used to walking away once I'm up $1,000 that I'm going to start cutting my wins, right? Once I'm back to that target, and actually increase my position sizing and having that mental buffer is going to mean that I'm becoming a worse trader, because I'm now catching smaller and smaller moves to get the same P&L validation. So I'm actually, making my job harder, right? But if I focus on the quality of my process, my rules and my process and my technique shouldn't change if I'm trading one contract or 100 contracts. It's the same thing each time, right? I'm looking for the same reasons to get out. I'm looking for the same reasons to get in. I'm looking for the same ways to manage my position each time. So I want to make like my obsession over that, right? Turn that into my muscle memory instead of thinking about a P&L goal. P&L is important for sure. That's why we do this game. But you try to judge your P&L on weekends, right? And on days off. You don't want to attach your ego to a number on a screen in the middle of a day, because it means absolutely nothing and it's too small of a sample size. So you're never one day away from feeling rich. So probably wouldn't attach any self-worth to that number on an individual basis. And instead, I would focus on improving the quality of your process. And then if you do, you'll average that 1K a day or that $500 a day or that $200 a day. Now, the caveat to that, right, is if you have this self-sabotaging tendency where once you're up green on the day and say you're up like $1,000 and then you always trade it away in the afternoons, yes, right, that needs to be something that you start to implement to protect yourself, right, so that you can actually start to see those effects of compounding. But that usually becomes a byproduct, right, of being too obsessive over needing that $1,000 date to begin with. So no, I hate capping my P&L upside or my theoretical P&L upside on the day. I'm going to trade until I think that there's no more good tradable opportunities. Yeah, so for me, Mark, right, I need three things to continue to hold a trade, right? Or I need two out of three things. So I need a strong candle shape. So a candle post entry that looks like a most bullish, second most bullish, normal body bullish, right? I need it to hold above higher highs, so above the previous candle's high. And I need it to happen on increasing volume. If I don't get any of those things, then that's my reason to start to look for an exit. If I get two out of those three things, then I should look to continue to hold my trade. If I get three out of those three things, then I should look to continue to hold my trade. Post entry here, right? I got 1 out of 3, or actually, I'd say 0 out of 3, right? I got a weak candle shape. I got a weak volume profile, and we didn't hold higher highs. So that's my reason to exit, right? This was my confirmation somewhere here. This was my confirmation, right? This was my entry candle using the aggressive technique. Post entry gives me a failed move to 39.50, and then exit target, right, is on a move through that area, which went to as high as 44.75. This then subsequent candle, right, did break out and go higher, but it would have stopped me out before it made that move. And again, you can find a more detailed version of that explanation inside the trading docs or inside the Start Here channel, right? That would be video number 5, Advanced Risk Management. You could also find it in the How to Trade with DTR. And it's a video titled How to Manage Winning Trades, How to Stop Closing Trades Early, and to Trust Your Ideas. So there's 2 resources that break down that concept in more detail inside the Discord. I would recommend everyone reviews that. Yeah, I don't have a tremendous amount of interest here in CL. Just the target here that I have would be 67.80. Don't have the space for it. Maybe a little bit better. Nah, same thing here, 67.81. So not just don't have the space to justify it. All things considered here, team, I think it's probably just going to chop about for the rest of the morning. I don't have a huge expectation of there being a tremendous amount of more action here. Well, generally it would be a breakout through the red line, right? So initial target here is to break out through this area to then target a 67.50. We haven't quite gotten close enough to say that this zone has been hit, but I can't quite do it. Maybe if it closed like 67.85 or 67.88, right? Maybe I could start to like kind of convince myself of that. But there's too much space between this close and here. Again, it's not really a set rule. So I can't give you like a super specific answer. It's just, yeah, like there's just a lot of space here. I don't know how else to describe it besides that. Like I could easily see this move happen in 1 or 2 candles, right? Like maybe the best way of describing it is like if I could see the move through the red line happen on kind of like a fluffy bullshit wick, then that's probably close enough, right? Where it's behaving like a zone. Where if it's like still looks like it needs to take a candle or 2, that probably that would be kind of, I think, probably how I view it. Like this, probably you could say, hey, probably it's still going to take 1 or 2 candles, maybe more, right, to go down or to get to that target. So probably hard to say that it's ready to go towards 67.50. and it'll be a little bit contextual too, Eric, right? So on days where you have more aggressive trending conditions and things are moving smoother, that like buffer zone, right, where you say you're hitting your targets becomes larger. On days where things are like really choppy and kind of like indecisive generally, then that you want that buffer to become smaller, right, and more specific. So it's every now and then there's like bits of trading, right, that are more art than science. I would say generally that element would be more art than science. And then the other realization, right, or the other point of why maybe that isn't super specific is because like 95% of my trades, I'm just targeting this red line anyway. For me to get a breakdown through that red line and to sustain that move for a consistent period, it's unlikely, right, for most days that's going to be in play. And like if I couldn't make money on the separation from the opening range to the red line, it probably isn't my day anyway, right? Like the whole point basically of um having the profit targets set where they are with this indicator is it effectively frees up my mind from having to make those decisions, right? So the beauty of trading in this way or having your process like your profit targets be determined the same way each time is I don't have to put really any energy into that. I don't have to overthink about it, which I know sounds kind of ridiculous, but it's like it's allowing me to refine my focus on the things that actually move the needle for me. So yeah, for me, right, like the point of this indicator in general is for it to remove my ability to have to make intuition based decisions or to apply exceptions, right? And because I do the same thing every single time, or like get to my same profit target every single time, if it proves that it's not a good profit target, right? It's an easy change to make because that variable is consistent. So it kind of like hides your bad patterns, right? So if I have any bad habits or I have something there that is maybe preventing from me being profitable, this makes it easier for me to be able to identify those things because how I get to that part is the same each time. So if I'm leaving money on the table, right, or my profit target is consistently flying through, it's going to be obvious to see, and I can understand what I need to change to get there. But yeah, realistically, team, I think now at this point, right, I'm starting to feel as if I maybe have less opportunities to potentially trade. Now, maybe we can get a look here on the 5, but we're so close to these psychological levels, and we've seen them get stuffed multiple times here before, that I would like to see us close, basically as close to that 23,000 or that 6,300 here on ES. Right? It's been a choppy day. It's been a slow market, right? It hasn't been a high conviction environment. So it makes sense to be stricter here, basically what you want to see defined as support, right? On days where markets are roaring and it's a trend day and you're getting that big follow through, right? You can be less fearful, right, of resistance, maybe. What's the other ingredient that's missing on this, right? That probably tells me indecision or like kind of false breakout. So volume is increasing, but it's not what? Yeah, it's not outlier, right? So if we've had a personality here, we'll say from this candle, right, 950 to 11. So for the last, hour and some change, we've not really seen any of these volume standards, right, particularly show us any enthusiasm. Then this candle, right, breaking out where it is, it's not really giving us like a personality change, right? Besides it holding above this green candle here at 1020, there's nothing here that tells us like anything different, right? So that's why we need that outlier volume, is we want that outlier volume because it signifies for us, right, that we're getting a change in personality, and we're getting that change in personality from consolidation to breakout, right, or consolidation to trending. So if we're not getting that volume to stick out and we've seen consolidation and chop and whatever, then we've got really no like conviction to suggest that there's anything like particularly different. We're just being told that we've got a grindy fake out here to the upside, not that we necessarily have a personality change that would indicate an environment where we can easily make money. Now, obviously, me saying that here now and spending 20 minutes breaking that down probably means that indexes are going to run for 250 points here to the upside and completely invalidate everything I've been saying here. But we're not trying to catch every move, right? We're trying to catch like 70% of moves, right? So 70% of the time, right, that's giving us a good idea of where markets are going to go, or where they're not going to go, maybe is a better term. And pretty much no matter what you try, not everything's going to work 100% of the time. So again, don't expect yourself to get there. But any questions here, team? Like I said, I don't think I'm going to do anything else here now at this point. Markets are slow and choppy and not really giving me any indication of really tremendous or incredible momentum. Maybe a little bit better here on the 3 min. That's a good breakout. Good volume. Pretty much larger than the last little bit of chop. I mean, I'm going to take back my comment. I could definitely watch on Q here. So let's see, right? The other element we've seen here happen multiple times today is give us a little breakout, retest the stop loss, make a new low, and then pull back higher. That effect could definitely be more pronounced around the psychological level. So let's see if it happens. Reference price would be 23.12. Stop loss would be 04. Okay, interesting. We're looking for a gentle pullback here. Let me answer that question when I have some time. It's not the right time to answer that question, Ghost. I need to think about my entry here. I can't think about that right now. Okay, there's that possible fake out scenario. And I'd be looking at 23 on the dot, right? Here's your stop loss. And cut. Potentially looking a bit like a rejection. The pace at which it's rejecting lower doesn't feel super enthusiastic. A little bit better, but no, once I decide that it's time to exit a trade, it's time to exit a trade. Right? What's the point of making a rule for myself if I'm willing to break it when I have like an emotional pressure to do so? So no, if there's something that tells me I need to get out of my trade, I need to get out of my trade. What I can then do, right, is go back end of day, study, analyze that, and determine, was my reaction valid? Was it vindicated or not? If it was, sweet, good decision. If it wasn't, okay, why not? Why was I being told that I need to get out? If that continues to be a pattern, right, then you can make a difference for a change. But no, once I determine it's time to get out of my trade, my most likely outcome, right, if I'm willing to tell myself that it's okay to change my rule, is I'm just going to change my rule based on how I feel that day, right? Based on my greed or based on my fear. And the patterns that trigger that are going to be a lot more difficult to study and track than patterns over where I actually close. So no, once I make a decision, I'm not giving myself any reason to change my mind, because my reason is based on a technical decision. My interpretation of what invalidates that technical decision is emotional. So I can't go from being rational to irrational if I want to maintain profitability. Again, I'm a little bit confused by some of the questions here today, right? A lot of them have basically been around applying exceptions and like creative ways to break rules or to break processes. I don't necessarily understand where they're coming from here. My objective with my trading on a daily basis is to be as systematic and as consistent in my approach as possible, right? It's the consistency of that that makes me money. This obsession to try to like maximize daily P&L, I think is it's focusing on the wrong thing personally. Like I make money as a trader. I get rich as a trader by the result of thousands of good trades, right? Well, even hundreds of good trades. So all I'm trying to do is how can I make it so that I can consistently do that over that sample size, right? The more exceptions, the more variables, the more whatever, the harder it is for me to be consistent because there's too many other things that then influence that. Yeah, everything, right, is pretty much designed. Okay, how can I wake up like a grumpy prick. Okay, how can I be still consistent in my trading, right? Okay, I woke up euphoric, I had a great night's sleep, whatever, right? How can I make sure that I'm still consistent in my process? Okay, I got into an argument with my sister last night. How can I make sure I come to today's session in a consistent mindset, right? And consistent process. So the more that I can focus on making good muscle memory of why I'm making decisions, the less I can have emotional triggers impact my why and impact my P&L. And again, right, I'm a speculator. So speculator by nature, right, doesn't hold it against themselves when they are wrong. They use that as a piece of data and then they study it, right, and they learn from it and they get better. So I'm not trying to maximize my P&L on a trade to trade basis, right? I'm trying to maximize my P&L over my sample size or over my longer period. If I need that validation trade to trade, dude, it's just too much of a roller coaster. You lose your mind. So it's not how can I make money here today? It's how can I make money after 100, 200, 300, 500, 1,000 decisions. That's it, right? So the more consistent those processes can be, the better. So I have rules for what I need to see a trade, right? Like to get a setup. I have rules for what I need to see to be able to enter a position, right? Which are position sizing, stop loss, right? Risk management based stuff, risk reward based stuff. And then I have rules on where I need to exit, right? So either take profits or failed breakouts or failed breakdowns once I'm in a trade. So those are all fixed rules, right? Okay, if this happens, I do this. If this happens, I do that. Those are all scientific, right? We'll call it, right? That's the science part of trading. The art, right? Today on NQ is closing at this 43.75, right? Instead of closing at this 34.50, right? So the art is then having the flexibility to maximize your P&L within your structures, right? So one of my favorite, one of my hobbies, like photography, right? And so especially when I travel or these days when I'm spending a little bit of time in the Alpine, I'm taking my camera up with me and I'm taking a lot of pictures. And there was a period in my life where I studied a lot of photographers and especially like film photographers. There's a great book. It's called Magnum Contact Sheets. And in this book, it's like some of the most famous pictures you've ever seen in your entire life. And it's the photographers talking about the pictures before that they took and the pictures after, and the rules around why they ultimately felt creative in their process, right? And what a lot of them said there is that they have, okay, I've got, okay, I only shoot black and white, right? That's rule number one. I only shoot a certain subject, right? That's rule number two. I only look for, I don't know, working class men, maybe as an example, right? So that's rule number three. So they have then three barriers, right? That they're restricting their creative process within. And then everything they do is inside of those frameworks. Kind of the same thing here with my trading, right? I am trying to restrict my ability to use intuition on 95% of my decisions, so that when I need to use that creative process, right, or that art side of trading, I am able to trade within the context or the confines of my creativity. So it's removing my ability to be intuitive, right? And to systemize my process on my setup, on my entry timing, right? On my exits, that I can then effectively be a creative trader in between those rules, right? So it's not that I am bending them or changing them. I am learning how to take advantage of them once they are in place. So it's once I have formed for myself that this has to lead to a decision, right? I have boxed in my trade that I need to take this based on my rules. Now I can look to maximize my execution, right? Or maximize my entry by then being creative in how I manage basically the timing within it. So instead of having to be fully charged on and fully sharp and fully clued in on how the market is moving at all times, I can save that energy and put it to where I want to be most sharp, right? Or where I want most of that intuition. I always say, right, trading is half science, half art. The art is that process, right? It's learning how to be flexible within the structures of your rules and then not changing them, right? Does that make sense? So my next trade is always predetermined, right? I'm either going to hit my profit target or I'm going to get an exit signal, right? Exit signal is a bad candle or it's a stop loss, right? So then once I've defined those two things, now I can look to maximize my edge by buying discounts and selling tops, right? That's the way I want to think about it. So once a trade tells me to get out, there's nothing then there that would tell me that I need to continue to hold that position. But it also doesn't mean that I need to close right at that moment, right? Like if I'm in a winning position and it's telling me that it's weak, okay, well, I can still look for a retest, right? I can still look for whatever. I can apply that market intuition or that market context to be able to make a trade. And each one of those decisions is going to be a little bit different, right? And they're going to be influenced by slightly different factors. So that's why we don't want to rely on them too much. We want them to be the cherry on top, not the foundational principle. Because again, right? If I'm making decisions based off of a technical reason, if that technical reason stops working, it is obvious why, right? And it is obvious what I need to fix to get over that. If I'm choosing to ignore technical reasons and I'm getting out of trades effectively off of a random pattern, I will never figure out how to hold out winners longer because there is no consistency in my process to get there. So then I'm relying, right, on trying to solve an emotional reaction, and it doesn't work very well. All right. Any other questions here, team? I feel like I've given you guys more than enough of a rant here today. So final call for questions here. Final call for questions. Yeah, I'll check my DMs once the day is done. I generally don't check them during the trading day. So if you want a question answered, right, just ask it in the chat. Otherwise, right, I would just be spending whole morning answering everyone's DMs instead of working through the Discord. So yeah, the only reason, right, you would have been red here today is if you panic closed your trade. If you panic closed here today, right, the question is why? Why did you feel like that was the appropriate thing? And how can you do that so that it's not the case next time, right? I think that's now what, day 26 in a row? Day 27 green in a row. I think this is probably going to be close to it, especially as a retail trader. Institutionally, I have no idea. Yeah, so 27 in a row. I reckon this is up there for sure. And again, guys, right? Like the reason why my P&L is consistent, my P&L is consistent because I am consistent in my execution and consistent in my process, right? That's the reason. So it's not because I'm like some incredible market savant. I would like to think I'm good at trading, but it's not that. I'm good at trading because I'm consistent in my execution. Right? It's kind of like a chicken or the egg thing. Right? I'm consistent at trading because I'm good at it, and I'm good at trading because I'm consistent in my rules, right? So they are such an incredibly intertwined process that has to be the obsession. Creating scenarios where you're living a high variance life, it's just a stressful way to live, and it's not a super sustainable path to profitability, right? All right. Any other questions here, team? I think I'm done for the day. Time for a sauna. Final call here. Final call. All right, sweet. So if no further questions, I'm going to kill the stream here for the day. Nice to be green. The markets didn't want to give us that much action here today by the looks of it, all things considered. No big deal. We're just going to remain inside that period of consolidation. And hopefully one of these days we'll get back to being a nice trending aggressive market. But we'll keep taking our base hits here in the short term. We'll keep focusing right on the variables we can control and getting just a little bit better each and every single day. And right, we all got something very important that we can learn from today's session, right? So really focusing on being specific over where we want to see price action close makes it easier for us to close at that level. Pick a number in your head, not a feeling. A number you can hit, a feeling you'll trick yourself into. So have yourselves a great day, team. We'll be back at it again here tomorrow. For whatever reason, that felt weird to say. But yeah, same deal like always, right? If you have any questions, hit me up outside of market hours. I will do my best to get back to you as soon as I can. And looking forward to catching up with a few of you here inside our 101s in a little bit. So have yourselves a great day, team, and I'll talk to you soon.